Hi. In one of my first videos, I spoke about stocks selling below net cash. In technical terms, this is called selling at negative enterprise value. In other words, if you buy all the company's shares at the current market price and pay off all the debts and fire everyone and close all offices and close the business, you'll be left with more cash than it cost you to buy the stock. This is even better than Warren Buffett's famous net, where you buy the companies at less than net working capital, because working capital also has receivables and inventory, which may be worth less than cash. However, negative enterprise value means you are spending less than the pure net cash you receive. That's a working wallet. The name, by the way, was invented by me and a value investor friend by the name of Martin about 18 years ago, right after the internet crash. At the time, many companies had just sold shares at the market peak just before stocks melted. If you want to know more about working wallets, buy my book, The Sleuth Investor. It'll be worth your while. But why the name? Because a stock selling below its cash value is like a wallet full of cash walking down the street, dripping cash as it walks. But why dripping cash? Because nearly all such stocks are money losers, which is why the market pays for them less than the cash, since the market is sure the cash will soon run out and the stock will be worth zero. Or maybe the market is right? Possible. In some cases, the market is right. But in other cases, the working wallet may have other assets which the market doesn't see. So if management cut cost and sells some of this asset or is taken over, the stock can soar. Now, where can you find a list of working wallet stocks? Just Google the word negative enterprise value and add the year 2021 and see what comes up. You'll find a number of tables with names, market cap, and the EV, enterprise value. When that last one is negative, you have before your eyes a working wallet. But how to find out which one is worth sleuthing? Just use common sense and a bit of specialized analysis, which is what this clip is about. So which stocks came up? At present, most working wallets are Chinese tutoring stocks that got killed by Xi Jinping a few weeks ago, and biotech stocks. Many of these latter got cash investment right after COVID, but then disappointed, so the stocks went down. I leave the Chinese stocks alone because I don't trust their numbers or the Chinese authorities. I also don't speak Chinese and don't know the culture, so I couldn't sleuth them either. But as for North American biotech companies, that's another matter. Even though I'm not a doctor, I have friends who are, and I know professors who can tell me what a company does and whether its people are known as good or not so good. Let's pick one of those biotech working wallets as a sample. But once more, remember, this is not a recommendation, just a tutorial in working wallet techie analysis. The sleuthing you'll have to do yourself, as usual. The company I picked is named PULM, PULM symbol. It's a clinical stage company that discovers and develops inhaled therapies to prevent and treat respiratory and other diseases in the US. Pulmonary, by the way, means the lungs, hence the name. So why is Pulmatics a working wallet? Because at the price of 75 cents a share, market cap today, the market price times the number of shares, is $42 million. Tiny. But it has a cash pile of 57 million, more, and a debt of only 1 million, for a net cash of 41 million. So if you buy all shares and pay off all the debt, you'll be left with more cash than you had spent. How much more? 30 million more to be exact. That would be an immediate return of 30% on the 42 million bucks outlay. Nice. So what's the catch? If you want to get this immediate return, you better have 42 million bucks right now and act fast, because Pulmatics is bleeding about 20 million bucks a year. Therefore, its cash pile would last a bit less than 3 years. Since you're unlikely to shell out 42 million bucks just like that, there better be other reasons to be interested. Are there? There just might be. And that's because the company may have other value besides the cash pile. How to know it? Well, There usually are at least 3 indicators of value in a tech working wallet. First is the cash per share. Second is the research and development per share. Third is the revenue per share. There may also be sometimes real estate and such, but this is rare. So let's stick to the main 3. You already saw that net cash per share, about $1 per share here, is more than the stock price of 75 cents. Let's go to the research and development now. The company has been spending a lot on R&D, and this is mostly D, that is development of an existing product rather than blue sky research, which is hit and miss. Most development research usually loses half its value after 3 or 4 years as the world moves on. So as the first estimate of the value of the IP, intellectual property, just add the R&D spending of the last 3 years straight off the income statement. In PULM's case, it was a total of $41 million or 73 cents a share, almost exactly the same as the stock price. Now, why is it important? Because if the R&D works out and creates a product, a competitor who wants the business has to spend at least as much or buy out this company. So will the R&D work out? Well, it already is somehow because the company does have sales. However, what you want to know if it can also work out in the future. Will it? Here is where your sleuthing should come in. Because if the R&D does pay off, it could be big and worth multiples of the money spent. How big? Just as background, let's look at 2 former walking wallet pharma companies, Novavax and Curis. Novavax, a biotech company, symbol NVAX, specializing in the flu medications, was trading as a walking wallet about 6-7 years ago. The price was between $2 and $3 a share, adjusted for splits. The stock was then supported by Bill Gates and is now selling for $227 a share, since its products were found to be good for COVID. Yup, that's about 80 times on your money in 6.5 years. Nice? And it's not unique. The other walking wallet biotech companies, Curis, symbol CRIS, rose from 70 cents to 7, or 10 bagger during that time. The fun part is that the walking wallet doesn't even have to be a biotech. Another multi-bagger walking wallet was Acacia, a patent litigation company, symbol ACTG, that was selling at $2 and change and rose to a recent $5.50, a double and a half. By the way, Acacia's peak was 35 before it became a walking wallet. So this one may still have room to run. But again, please note, I am saying may. Nothing is for sure, and that your sleuthing is needed. Now what about Pulmatics, PULM? Can it do as spectacularly as Novavax and Curis? There is never a certainty. But the R&D is here, and the cash is here, and there's also revenue, the third component of value. How much is the latter? Revenues have been rising year by year, from $150,000 in 2018 to $8 million in 2019 and to $13 million in 2020, or about 23 cents a share. Recently, sales surpassed analyst predictions in second quarter results by about 47%, and the loss of 7 penny a share was smaller than analysts predicted. But yes, the company is still losing money. So the risk is that it will blow away the cash on salaries and expenses, and in 3 years, the stocks will be zero. But there is a potential that will be a bit higher. What is the potential? Let's do a quick back off the envelope calculation. That's the one I'm trying to teach you. The low target one time is going to be one-time net cash plus one-time R&D per share of the last 3 years plus one-time revenue per share. The total is $1.95 a share, or 2.5 times current stock price. However, a more reasonable value target would be one-time net cash, because cash is cash, 3 times R&D per share, plus 3 times revenue per share, or $5 a share. To sum up, current price 75 cents, target 2 to 5. Or maybe even more. Maybe, like Novavax and Curis, or maybe 0. What do I think? As for this, only those who do the sleuthing will know. As I said, I only present PULMax, this company here, as an example of how to analyze a tech walking wallet. The sleuthing you'll have to do yourself. That's all for today. Please tell me in the comment below what you think of walking wallets. And if you like, please subscribe and tell all your friends that they subscribe too. I'll see you next time. In the meantime, thank you very much for watching.